Hey everyone, welcome back to Corporate Decoder. Today TruBridge Incorporated just filed an 8K announcing a significant change, and I'm seeing a clear indicator of a company moving out of the public eye. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company has been acquired in a cash-out merger, and it looks like the party is over for shareholders. Alright, so what we have here is a current report filing from TruBridge Incorporated with the Securities and Exchange Commission, or CC. This is essentially a public announcement of a major event. And the biggest event here is their acquisition. The deal closed on the 9th of July 2026. Basically, a company called Inventurus Knowledge Solutions Incorporated, or parent, bought out TruBridge Incorporated. It was structured as a merger where TruBridge, the company we're looking at, is now a wholly owned subsidiary of Inventurus. This means Inventurus now owns all of TruBridge. Now for the juicy part for shareholders, if you own TruBridge stock, you got $26.25 in cash for every share you held. This is often called a cash-out merger. It means all the public shareholders are bought out and the company will likely stop being traded on the stock market. Think of it like the company buying back all its pizza slices so it can eat the whole pizza itself. The price of $26.25 per S-share is what the research context shows as the current price. So it looks like shareholders got the going market rate, which is pretty standard. Following the acquisition, TruBridge also took care of its existing debt. They paid off all outstanding loans and obligations under their credit agreement, which was with Regions Bank. This means their slate is wiped clean financially speaking, at least regarding that specific debt. It is common practice in these buyouts to clean up the balance sheet. This section really just reiterates the acquisition. What is interesting here is how they handled existing employee stock options and awards. For restricted stock awards, or RSAs, any conditions to earn them were automatically met, and they were converted into the right to receive that $26.25 cash payment. For performance share awards, or PSAs, the performance goals were essentially judged up to the day of the merger. If performance was clear, actual results were used. If not, they used target performance. These were also converted into cash. Essentially, anyone with equity in the company got their shares bought out in cash based on either their actual performance or the company's targets. This is a big one because TruBridge is now a private subsidiary of Inventurus. It no longer needs to be listed on a public stock exchange like NASDAQ. They've officially notified NASDAQ that they want their stock delisted. This means the stock symbol TBRG will no longer be traded on the NASDAQ. The filing also mentions they plan to terminate their registration with the SEC and suspend their public reporting obligations. This is a clear signal that TruBridge is going private, and investors who want to trade it will no longer be able to do so through a public exchange. This confirms what we've been discussing. As a result of the merger, being a shareholder of TruBridge is essentially over. The old shares were cancelled and converted into the right to receive that cash. So, the rights you had as a shareholder are now just the right to get paid. This pretty much wraps it up. The merger means Inventurus now has complete control over TruBridge. They became a wholly owned subsidiary. The acquisition was financed by debt, with Inventurus raising $635 million under a credit facility. This shows they've got the capital to pull off this deal, leveraging debt to do so. As expected in a takeover, there are some changes in leadership. All the old directors of TruBridge stepped down. The directors from the acquiring company's subsidiary, Merger Sub, have now become the directors of TruBridge. On the flip side, the existing officers of TruBridge are continuing in their roles. This suggests that Inventurus wants to keep the operational team in place, at least for now, to run the business as a subsidiary. This section details the legal housekeeping. TruBridge's formation documents, its certificate of incorporation and bylaws, were basically updated to reflect its new status as a private entity under Inventurus. The old company's articles were amended and restated, and the subsidiary's bylaws became the new ones, with name changes reflecting the new ownership structure. This is just to inform the public that on the 9th of July 2026, TruBridge and the parent company, Inventurus Knowledge Solutions Limited, issued a press release about the merger closing. This is standard procedure for major announcements. The press release itself is attached as an exhibit. This last part is more of an index. It lists all the supporting documents for this filing. You can see the merger agreement, the updated company charter and bylaws, and that press release we just talked about. It also includes the interactive data file, which is for digital filings. So looking back, this filing is all about the completion of the acquisition. TruBridge Incorporated, or TBRG, has been bought out by Inventurus Knowledge Solutions Incorporated. Shareholders received $26.25 in cash per S-share, and the stock is being delisted from NASDAQ. This is a complete transition from a public company to a private subsidiary for investors. It means they've received their payout, and the opportunities to trade this stock publicly are now gone. It is a common, albeit sometimes bittersweet, end for public companies when they get acquired. What I am really seeing here is a straightforward cash out. There is no indication of stock swaps or continuing public trading. The company's financials, market cap, and employee numbers from the research context show it was a mid-sized player in health information services. The price to earnings ratio of 90.5 on the higher side might have made it an attractive acquisition target for a company looking to expand or consolidate. The fact that the acquisition price matches the current market price suggests a fair deal was struck. The biggest takeaway is for the shareholders who are now cashed out. The era of TBRG as a publicly traded entity is over. Alright, that is my take on this 8K filing from TruBridge Incorporated. What is your take on this acquisition and what it means for the company and its former shareholders? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. Stay decoded.